Story here from Sky News. Coronavirus. Bank of England rescued government, reveals governor. The government would have struggled to fund itself if the Bank of England had not intervened during the market meltdown of COVID-19, the bank's governor has told Sky News. In an exclusive interview, Andrew Bailey said that in the early stages of the virus, Britain came within a whisker of not being able to sell its debt, something many would characterise as effective insolvency. Yes, true. If you are a business, if you're a government, if you're a person and you can no longer pay your debts, you are technically insolvent. While there was an uncovered gilt auction in 2009, in other words, the government was unable to find buyers for all of their debt, it was selling to investors, it was widely seen as a one-off. Now, this is important to realise. When the full crisis happens, the central bankers, Andrew Bailey, the Prime Minister, whomever it is at the time, whether it's Boris, whether it's someone else, they will have smiles on their face. They will say, the situation is under control. You probably won't even know about it. As a Joe Schmuck on the street, you will not know that the UK is in full crisis because they will hide that from you. They need to hide it from the markets. The Bank of England, the UK government cannot be seen to be in crisis because the whole system is inherently unstable, only works off confidence. So back in 2009, the Bank of England was buying debts and it was largely kept secret because when gilt auctions fail, when bond auctions fail, they need to hide that from the general public because if people start panicking, if people start ditching the pound and just buying anything tangible, whether it's tools, whether it's cars, whether it's food, if they're worried that the pound is about to collapse, that's not going to be good for the stability of the country. So they will lie to you. They will say everything is under control, everything is fine, while in the back rooms they are taking radical steps. So this was the case in 2009. This is largely the case in 2020, and this will continue to be the case in the future. Mr. Bailey warned that the dislocation in markets in March was even more serious, prompting the bank to intervene with £200 billion of quantitative easing, aka money printing, aka currency debasement. They like to use these long and technical words like quantitative easing, but let's call it for what it is. The Bank of England creates money and then it buys bonds. The biggest single cash injection in its history. We had a lot of volatility in core markets, the core exchange rate, core government bond markets. We were seeing things that were pretty unprecedented, certainly in recent times, and we were facing serious disorder. Well, remember back in 2008, 2009, when QE started, they said this was unconventional money policy. This is a one-off. Now that was, 12 years ago, 11 years ago now. So these unprecedented actions, expect these to continue. We're not going back to normal anytime soon. The UK has breached its debt to GDP level of 100%. The situation is only going to get worse. And when they say things like unprecedented, expect that to become the new normal, right? The new normal is happening in many areas now, and QE, money printing, zero interest rates, the Bank of England saving, the UK government by buying treasury bonds. It's just going to continue. Asked what would have happened had the bank not intervened, Mr. Bailey said, I think the prospects would have been very bad. It would have been very serious. Yes, and I've mentioned this in previous videos as well. I believe I had a video that I made in 2019. It was called something like Wide-Scale Civil Disorder Coming to the UK. And I mentioned when we start seeing serious economic collapse, and we haven't seen that so far in 2020, it's been largely supported by money printing, by Rishi Sunak, just throwing out money, making it rain money. We've largely suppressed the civil unrest. But look what's happening. We've had very violent protests in the UK in the last few weeks. Last night and the night before in Brixton, we had civil disorder. The police trying to stop what was, I believe, a house party or a street party. They were met with severe violence. And the situation at the moment is largely peaceful. The world is functioning. I'm looking out, at roads, at businesses. Things are opening back up. Things are largely calm. When the real collapse happens, and we haven't seen that yet, it's going to get wild. Expect it to be very, very serious. Yes, it will be serious, not just for people that own bonds, not just for people in financial markets. The average Joe in the street will have their eyes open to how quickly UK society could potentially deteriorate. I've mentioned this many times before. Who owns firearms in the UK? The average citizen does not. We do not have a Second Amendment to protect average citizens. The people with guns, largely, especially in inner urban areas, are very violent people. organised criminals, drug dealers. These are the people with firepower. Expect UK society to potentially, I'm not saying this is definitely going to happen, but I'm saying be prepared that it could go off a cliff edge. And if we start seeing the UK government no longer being able to fund benefit payments, pension payments, paying police officers, paying the military, expect it to get wild. Just pick up a history book and look at any country in the 20th century or even early parts of this century, the 21st century, and look what happens when there start being bond market failures. It gets wild, and it gets wild very, very quickly. I think we would have a situation where in the worst element, the government would have struggled to fund itself in the short run. Again, very serious. If they can no longer pay the public sector, it's going to get wild. The bank's decision to create so much money and use it to buy government bonds, including an extra £100 billion only last week, has prompted some to ask whether it is in effect financing the government's borrowing. Mr. Bailey rejected the accusations of monetary financing. I mean, of course, he would have to reject this, because if they call it monetary financing. I prefer to call it monetizing the debt, is what I've said in many of my videos. If you go back and watch my videos, I say monetizing the debt. What we're essentially saying is the Bank of England or the central bank create money, and they are just financing the government spending through money creation. Yes, of course, they are doing it. They've admitted to that. In 2009, if they couldn't sell gilts, bonds, they just create the money and give it to the government. As investors start looking at the UK government as well as other governments around the world and say, well, now they're past 100% debt to GDP, with increasing probability this nation will default on its bond obligations, maybe we should put our money elsewhere. When investors stop buying bonds, who's going to be left to buy them? It's going to be the central bank. It's going to be the Bank of England. At no point have we thought our job was just to finance whatever debts the government issue, he said, pointing that the objective was to ensure economic stability. Well, Andrew Bailey can point at whatever he wants. Judge Andrew Bailey and the Bank of England by their actions. Don't say their objective is to ensure economic stability, because we've had very little economic stability in the last 20 years. Since 2001, when the dot-com bubble crashed, yes, that was maybe largely focused in the NASDAQ in the US, but we saw day traders in the UK. We saw people just giving up their jobs, sitting at home buying tech stocks. That did happen, and that only happens off the back of cheap money. Then cut forward to 2007, 2008, we saw a very large housing bubble here in the UK. Yes, maybe it was bigger in America. Everything's always bigger, in the US. But it happened here in the UK. The Bank of England in no way ensures economic stability. Just look at the record of the last 20 years. That's not their main function. He said many indebted companies will struggle to finance themselves in the coming months, but that the problems went beyond those with balance sheet problems. There will be some activities which people did before COVID, which they will just not go back to. It's not going to be the same for some period of time. So I think there'll be some activities and companies who say they had a perfect viable business model before and weren't over indebted, but sadly habits have changed. So all this idea, things will bounce back, V-shaped recovery. Andrew Bailey's saying it here, that companies with viable business models that aren't heavily indebted, some of these companies will go bankrupt. It's just the world has shifted. The world is not going back to normal. We're only a few days away from people thinking this is happening. 4th of July, everybody's celebrating. Pubs are going to be opening. Restaurants are going to be reopening. Many restaurants may reopen for a temporary time. Some may not reopen at all. If you're a service sector economy, it's going to be very hard for you to cope with the new rules and regulations. If you're a multinational corporation, you'll probably do very well out of this, because the government regulations are going to force many small companies to close. Now, I mentioned this back in the video. This video was made on the 4th of March, how it's called Coronavirus, the Threat to the UK Economy. In that, I mentioned how Mark Carney, how Andrew Bailey, the governors at the Bank of England, weren't taking the threat of coronavirus seriously. I'm quite surprised about this from Andrew Bailey. He's not one of the traditional London School of Economics educated kind of central bankers. He actually studied history. He has a PhD in history from the University of Cambridge. Now, this is quite surprising, because generally historians actually have a better grasp of economics, and at least economic history. than people with PhDs in economics. If someone talks to you and they give their opinion and you find out they have a degree from the LSE or a PhD from the LSE, you can pretty much immediately discredit what they're saying. They've drunk the Kool-Aid, they're MMT folks, they're Keynesian folks, they don't really have a graft. Historians tend to. So whether Andrew Bailey really believes this, I don't know. I mean, he's a historian fundamentally rather than an economist. I think deep down he knows he has to just give confidence to the market, essentially lie to the market to give it confidence. He doesn't want to see the pound collapse tomorrow. I think ideally he probably wants to hand the baton over to the next governor of the Bank of England. Boris Johnson wants to hand the baton over to the next government. Everybody just wants to eke out, 5 years or 10 more years before the eventual collapse happens. It's very worrying. People should prepare. A lot of people think this is just stock market related, it's just bond market related. No, it's not. When the eventual collapse happens, and I'm not saying it has to happen, if radical action is taken now by the Bank of England, if radical action is taken now by Boris Johnson and the UK government, the crisis can be averted. I'm not saying it's too late, but for every day that ticks by, fixing the problem is becoming increasingly more difficult. And even to fix the problem, it will require some short-term pain. Thanks for watching this video, guys. As always, gold is money. Everything else is just credit. Eventually, the pound sterling will be worth its intrinsic value of zero. Gold will never be worth zero. Gold will always, while humans are on the face of the earth, gold will always have value. Thanks for watching this video, guys. If you like it, like, comment, share, subscribe, and I'll see you in the next video.